Big picture analysis, Bloomberg Commodity Index, BCOM. And I'm going to show you why I believe risks are high that inflation is going to rebound. We're going to look at multiple time frame analysis in the Bloomberg Commodity Index, and I'm going to teach you some cycle analysis while I do this. I think this is important. Many times you've heard me say that I thought we were going to be in an inflation doom loop. In other words, when the Fed finally started to cut interest rates, that commodities, which have been soft, would then begin to rebound. And we would get another period where commodities were very strong. We've seen that the grains were weak for a long period of time, potentially bottomed if you're following our analysis. That the metals, industrial metals, have been on the weaker side, especially compared to the gold market, which has been extremely strong. And overall, we'll say the commodities have been soft, led very much by energy on the downside, and oil has been extremely weak. And that's been following the analysis that we expected. So now we're going to look at this commodity index. I like to look at this one maybe a little bit better than GSG or the other ones. They're all heavily weighted by energies, but this one less so than GSG if you look at that, or the GSGCI. So we're going to look at this, the Bloomberg Commodity Index, for this analysis, multiple time frame analysis. Let's switch over now and look at the charts that we're going to start in, which is the weekly and daily charts. And this is, of course, cycle analysis. For those of you that are brand new to this analysis, we're looking at the rhythms in the market. Essentially, these are money flows, and we have a very mechanical way of analyzing the market based on the shape of the individual cycles. We use these half circles in the bottom, cycle brackets, in order to be able to see where there is a rhythm. In other words, a similar time between each of the cycles. They're not exactly the same. We come out with an average time frame. And looking at this one, this is 28 bars that we're looking at between each of these cycle periods on average on the weekly chart. You can see here also on the daily chart that there are also cycles in here, and I'm going to look at them in detail so you understand. Let's start on the weekly chart right over here, and you could see the cyclicality that is in here as we look way back over here. From this is into 2019 over there. So we're looking at about 5 years in here of cycles. These little notations in here where it says right-hand translations right in there. Let's just get a little closer in here so you could see. Right-hand translation, right-hand translation. That means that each of these cycles peaked on the right side, as you can see. That only leaves time, a little bit of time for corrections. When you peak on the left side of the cycle, as you can see right over here, that leaves a lot of time for corrections, and you get into bearish trends, as you could see. A lower peak, lower trough, lower peak, lower trough, lower peak, lower trough, lower peak, lower trough. Each of those breaking the cycle where it started at those cycle support levels and giving us the downtrend that we've been in. So where we are right now is, as you can see, we're getting into the period that we call the bottoming period right in here, in between these two timelines, which tell us that this is what the range of time is that the bottom or the trough should be set in this particular cycle. So the expectation is, when you have a left-hand translation, is the next cycle will not achieve a higher peak. This one got close, as you can see right there, and the translation in here is pretty neutral. So it tells us there's some kind of a potential bottoming going on, but it is still negative. And you can see in here the reversal scout right there is still negative and then turning upward. So when it turns upward, it gives us the warning of the bottom in there. So this is a warning that the weekly cycle has bottomed. Now what we do is we look at multiple time frame analysis for confirmation in that, and just before we move on to any other charts, I want you to see the holdings in here, where energy is 29%, grains 23%, industrial metals 16%, precious metals 20%, soft 7%, livestock 5%. So it's pretty broad, but as you can see, weighted mostly in energy and metals. Maybe that's where the most interest is when you get into these commodities, or the most demand, or the biggest floats. So we're in this period where it's likely rising, but you can see I don't have it projected taking out that peak, though it certainly could project another peak to test that area up over there. But this you could see as a rising phase. This says to me commodity prices likely to rise. Now, you can see in here where this was falling, we know that the bond market has been projecting that there will be cuts in interest rates, and they projected something like over 200 basis points of cuts. And generally, when the commodities are soft, you get into those periods where the market will then potentially project lower interest rates. That's what went on right in here. Now, it's yet to be seen whether the market will begin to project that interest rates have been, there's too much baked in the cake in that market. We don't really know that yet, but there is certainly the way that the Treasury yields are priced, it may say that interest rates will fall very sharply, but we've seen in the past where that actually didn't happen, where the market overestimated what the Fed would do, and that happened earlier in this year. So in this case, we're looking at just the bottoming here in commodity prices. When I look at the daily chart, and I'll just go to the side-by-side for a moment. Here's that weekly chart and this period right in here where we see the upward turn. Here is the daily chart, and this is really interesting because it has a dominant cycle and a minor cycle, and as you can see in here, turning up right there. So this big upward turn that you see here and the upward turn in the momentum conditions is also showing you that right in here. You could see that green arrow where it's showing you the slim ribbon has turned positive, and that is an indication that the market is turning more positive. Of course, there are all these resistance levels in here. These are the minor ones that are colored, comes off of this peak, and these are the dominant ones that comes off of this peak here. I'm going to blow this chart up now for you to see so that you can see the magnificence of the cyclicality that's in here, with a dominant cycle made up by two minor halves, and the minor halves very clear, and the conditions of the market very clear as the slim ribbon comes down right here. And the slim ribbon is a free indicator. If you want to know how to get that, you can write to our team. And on the bottom here is the slim ribbon PO, which is a level 4 indicator, and this gives you the signals when it's likely to resume in a particular direction. And you can see in here what was giving you all of these resumptions to the downside, which were just fabulous. Now you see what happened is it turned neutral right here and now is just turning green. So you have the beginning of what could be an extended period of positive momentum. You can see the projections in here. Now here's your minor cycles as they make up the minor halves, and that projects for coming up a little bit more, pulling back, and then moving up again, and potentially this cycle forming a positively configured cycle. Look at the beauty in here. Left shoulder, head, right shoulder. This was a very weak right shoulder. Made the head and shoulders top. It projected down to this level, which was just fabulous. So you can see all of this great information and how the cycle patterns actually make these chart patterns right in here. You always get chart patterns that are very interesting and you say that have meaning, but really it's the cycle rhythms that do create them. You can see in here where the positive upside conditions existed, where the minor correction was right in here. What that gave you was this little triangular shape right in here. Triangles are shaped by the dominant and minor forces opposing each other, and then when you get into the next minor force right over there, you get them moving in the same direction as they came in, which is a high probability. So you might have learned that, but didn't really know where those energies came from. And I just explained that to you. That is all taught in our cycle analysis workshop, which you can see on our front page of the site. So this is a positive condition right over here, but coming up into the momentum, into the resistance areas, which may stop it for now. I'm also looking at this date right over here, which is early in November. And it's making me look over here and say, what happens early in November? Well, early in November is right over here on the weekly chart. That is really clearly going to be a time frame when it should still be rising. And that says to me this is likely to be a positive cycle here, and then moving up again after that. So you can see we have these two projections in here. So what are these dominant forces? What is it that pushed the market down for this long period of time that you see right in here on the weekly chart? Well, those forces come from the longer cycles, which we explore on the monthly chart. I'm going to show you the monthly chart right over here, and you can see in here again the magnificence of the cyclicality that's in here. So this was that long period of decline on the weekly chart, as you see right there. Let me just get my pointer. And here is where the momentum went negative right there. And momentum, it was unusually choppy right in here and is still negative. Now, we have that weekly cycle that looks like it's bottoming. I just proved it by looking at the weekly and the daily. That pretty much sense to me that we can look for this monthly pattern to be bottoming also. We don't know that for sure yet. We don't have the momentum upturn, though we do have the momentum upturn in the weekly and the daily. It's kind of like a domino effect. The upturn will come first from intraday, then the momentum will be positive in daily, then positive in weekly, and then the last one, because it's much harder to turn that big tanker, is when you're on the monthly. That would then give you an indication. But what's important to look at in here is that we're getting into the period where commodity prices are likely to be rising in here. That's through a Q4 of this year and into next year, early into next year, or maybe even into the middle of next year, depending on how strong this is. If there is a rally in here and it gets above these levels that you could see right over here, that would be a cycle breakout, and that would tell you that a major bottom had formed. So that's an important level right over there on this BCOM, right around the 108.20 or so, which is where those peaks were right over there. It would take that to really tell us there was going to be a really big commodity surge. Now, you can see in here, as we looked at the monthly, it's just turning up right there. Again, we'll look at the weekly. It is just turning up right over there and momentum getting better. You look at the daily, this is coming into what looks like it's going to be a positive formation. And there's your monthly, and all three of these multiple time frames warning you that commodities are going to have an upward move. It could very well be a large upward spike. We don't really know that yet. Let's get a little help. You can see in here that the energies, when we look at this, the energies are the top weighted right in here. And that would mean that we'd be looking for or really need to have a rally in energies or in light crude to really prove that this was the right timing for a bottom. I'm going to switch over here to /CL, and this is the incredible monthly cycles on light crude. Now, what you can see in here in those yellow areas are the areas where there are periods of risk. In other words, it is the very final phases or corrective phases in each of these cycles. We are in that right here. We had been bearish and talking about that we're going to see the oil market move into the low 60s, and you can see right over there it did that. Got to about, well, 65, mid 60s. See here, similar to 2018 through 2020, that's right over here. Look at this, a big cycle, a failure in resistance, a big cycle, and which gave up the whole cycle that made it looking negative for the longer term. Same thing here on this monthly cycle, a failure in resistance, a failure in resistance. This is identical. You get that right over here where it failed next in that resistance. That's right over here. That's identical. It pulled back for 3 months very sharply, 3.5 months. It's pulling back for 3 months here. The question is oil done, or is it going to have, well, one more move on the downside and capitulate like it did back over here in 2020? Remember, this was the pandemic, and that's why it was so extreme. Oil went to negative $40. Nobody in the world ever thought that could happen over there. This is not likely to do anything like that. If anything, it's likely to make a bottom soon and give you this big, massive triangular shape right over here, which would be quite bullish if it did break out. Where's the breakout? Well, here's your downside right there, this is almost a VTL. VTL would be connecting that top valid trend line. That's also in our cycle analysis workshop. And that really says to me that, if it can make its bottom in here and get out over $75, it's then going to have set a very, very major bottom. We are still in a period where this bottom may not be set. So I wanted to show you, look at the beautiful similarity in here. Of course, it is the heaviest weight in the commodity index. And remember, it's a dollar sign BCOM if you're on the Thinkorswim platform. Look how similar that looks. When you look at that, this is more of a downward slope in here. And when we look at that, and that is because there are other commodities in there that were weak, that were weighing on it, especially industrial metals that were pushing to the downside, and grains pushing to the downside. So ultimately, this message in here is that there is a very important bottom that is forming in the commodity markets. It may have formed, it may be close to forming. What it says to me is that Q4 and that into next year, commodities are going to be rallying. That's going to make it very, very hard for the bond market to improve at all. It's also going to mean that the number of rate cuts that the market is pricing in will likely be reversed. And we could very well be looking at the Fed really threatened by higher commodity prices later this year and into next year, and how that would then change the whole tone of what we're seeing right now in the markets. I thought this was very important analysis. Normally, I would only bring this analysis to our members, but since we're running some important specials right now, I wanted you to get really a good peek, if you're not a member, to see the type of work that we do and what multiple time frame analysis looks like, and some important teachings about cycle analysis, so that if you're not a member, well, you'd get a really good idea why it would be beneficial to you to become a member. Later on, we're going to talk about our level 3 special we have going on right now, so you can look at that also. That is the big picture analysis of the Bloomberg Commodity Index, and I hope you found that absolutely illuminating.